Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating the session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, for those of us that have been around for some time are already aware, and for anyone that's joining us for the first time tonight, we have a process of where we live stream to multiple different platforms. So Rob's going to go through his general presentation, go through some case study considerations, and with the time remaining, he's going to take a combination of questions from all of the platforms that we are live streaming to. So just keep in mind that Q&A portion is limited, so the questions will slip through, and if they do, just know it has nothing to do with the validity. We just only have so much time with this session. Also take that as encouragement to attend the insiders meeting, which takes place every Thursday, and that's for our subscribers only, where there's a 45-minute Q&A portion. So obviously a much higher likelihood of getting your question addressed on that session. So with that being said, we are going to limit it to about 2 questions per attendee, just to allow enough time for as many questions as we can. Lastly, for any support related queries, I can handle those in the chat window. And of course, for any interaction amongst other attendees, please feel encouraged to use that window. Just make note that by default, the window for our Zoom audience goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change the to from hosts and panelists to everyone. Well, all eyes on the Fed meeting tomorrow, and surprisingly, the market was up the day ahead of that. So kind of curious on Rob's thoughts about that, and looking forward to interacting with you all. So thank you for joining us for this live session. And at this moment in time, I'll introduce the man of the hour, who we're all here for, and that's Rob Roy.
Thanks, Zach. Hey, everybody. Welcome to this week's TradeFinder Live. As Zach said, that we do have I'm getting a weird screen. Can you all see my, can you see my screen?
Yep.
You can? Okay. Not sure.
On your PowerPoint.
Yeah, the PowerPoint. So don't know, it's asking me to leave the webinar. So
don't do that.
Welcome to everybody viewing on the multiple social media platforms out there. As Zach said, we'll talk about the markets. We'll talk about international markets as well, not just the U.S., because I know we have a lot of international viewers. We'll review any case studies that we may have closed for our alert subscribers at Elliott Wave Options. We'll review the case study considerations that we have identified that may be considered to still be open in previous trade finders. We'll see if we can find a new one tonight, and with whatever time's left, we'll open it up for the general Q&A. That's how it works. So we got a lot to talk about tonight, so I'm going to go ahead and just jump into it real quick. Looking in the market, as Zach said, we did finish to the upside today. Maybe a little bit surprising to a lot of people with the big Fed meeting tomorrow. Why is it a big Fed meeting? Well, I think this one is a little more anticipated than some. You know, Chairman Powell and the Fed have been hawkish for a while, but there's the expectation that they're going to go down to a 25 basis point rate hike. And so I think there's a lot of interest in, one, do they really go 25 basis points? Two, how hawkish does Powell sound? Do they give any indication of when they may actually pause? As you know, or if you've listened to the weekend update, we talked about Canada paused last week, and they said, hey, their central bank said, we're done. We're going to hold things here and see how things go. Does the Fed take any direction from that as far as communicating on when they may pause? So I think there's a lot to think about. Wouldn't have been surprised. We did move back to the 10-day moving average yesterday, so that wasn't surprising at all. But to bounce off of it today, I think was a pretty bullish sign, especially when there is some uncertainty as to exactly what Chairman Powell is going to say and what his general tone is going to be. We hear from all the Fed governors. Talked about this a lot. Those of you that have seen me in the past at any sort of a live event, when I would do my little thing on the Fed and Alan Greenspan's Fed, I would put this cartoon up there where it showed Greenspan and a bunch of gobbledygook because they called it Fed speak. When Greenspan spoke, you couldn't understand what he was talking about. I mean, it just would be just gobbledygook. It would just make no sense whatsoever. And never did you hear from any of the other Fed governors. It's a whole different world now with this Fed, where they all want their 5 minutes of fame, it seems, with constantly being interviewed, et cetera. It just didn't happen under Greenspan. But anyway, taking a look at interest rates, this front of the Fed meeting, a doji on the 10-year. That makes sense, doesn't it? Indecision. And so far, trading in this range, as I've mentioned numerous times, in my opinion, for whatever that's worth, staying in this trading range is very supportive of the market with a potential move to the upside. I don't want to see rates fall off a cliff. Some people may think that that would be a positive. I don't, because I would think with how bonds work, rates go up, yields go down, they move in inverse proportions. Why are rates going down that significantly? That would likely mean money's leaving the equities market and going into the bond market. So I don't think we want to see a big move to the downside, but we don't want to see rates run up to the upside either. And unless Powell is more hawkish than expected, I don't really think we're going to see a big move back to the upside either. I think there's a likelihood that we finish this wave 5 and perhaps we churn into some sort of a corrective pattern, maybe a flat or something, which again, I think is very supportive and conducive to potential market moving higher from here. So if we take a look at where we are with the dollar, that's continuing to consolidate. Again, as I said, I like a strong dollar, but not as strong as it was. But I didn't like these vertical moves to the downside. So this churning stuff, I think, is very productive as well. I thought I would come back here and just remind everybody of this zigzag. Everybody's talking about it on YouTube, but I just wanted to remind you all that there's where the first move of this zigzag could go. And then we see if we move up to that 100% extension, which we should based on the B wave correction. But we'll have some resistance there at 61.8. And we could have a big move tomorrow, depending on how the Fed meeting goes, either direction. So it is going to be really interesting. And as usual, the announcement is at 2 p.m. and then Powell's doing a press conference at 2:30. So I think you'll see some interesting volatility tomorrow afternoon along those lines. So before I get into the rest of the markets, we have a special guest tonight, someone that I've known for a very long time, a really good friend of mine, and also a very accomplished trader. His pedigree, as you'll hear, I'm going to let him tell a little bit about himself, speaks for itself. And we're excited to have him as a new member of our EWO team. And next week, he's going to be giving a presentation. Those of you that are aware of what we do at EWO, we have our AI-based time strategy, which is a delta neutral strategy, but it's based on very specific criteria. And a lot of our alert subscribers are sending in messages on how it's becoming more and more their favorite strategy, but it has been limited with the number of results that we've seen. But Jeff Beamer, who I'm going to ask to introduce himself and tell you a little bit about himself, has a delta neutral strategy that same type of thing as far as delta neutral, but it works very well in concert with what we're doing, which is going to create more opportunities for our subscribers. So we're super excited to have him as part of the team. And next week, we will be doing a presentation. We're doing one for our alert subscribers tomorrow night. But for those of you that are in TradeFinder, next Wednesday, so not tomorrow, but next Wednesday, all of our TradeFinder subscribers, if you've subscribed to TradeFinder, you will automatically be registered for presentation next week. So Jeff's going to be here to introduce himself and tell you just a little bit about himself and his background. And then the presentation on the strategy will be next week. And again, if you're a TradeFinder subscriber, you don't have to do anything, but show up at 9 p.m. Next week, and you'll be sent out a link to join the presentation. So with that, Jeff, are you there?
I am. Good evening. Hey, Rob. Good evening, everybody.
Thanks for being here. Jeff, say hi to everybody from 9,000
Yeah.
different social media platforms. I've lost track of them
That's
all.
awesome.
So.
Yeah, that's awesome. Very impressive. That's awesome. It's great.
All
So,
right. Yeah, just tell them a little bit about your background. I didn't want to steal the thunder, and I'm sure everybody will be as impressed as I am. I've known you for a long time.
yeah, and it's I'm sitting here listening to you give a little bit of a prognosis about the market and your forecast, and I'm right on board with everything you're saying, and it's tomorrow will really tomorrow will be an interesting day. We'll see if the bulls can push us through to new highs, or if the bears take over and send this thing down. So
Yep.
we'll see what happens. But
totally agree. I like your word. Interesting is gonna. They always pick on me because I use the word fascinating a lot. So everybody always makes fun of me, and then they jump all over every time I say it. So I'm glad you said interesting. So it's a different word, but kind of along the same lines. So yeah.
Right. So. Right. But man, I can't count how many of these I've seen over the 35 plus years that I've been involved in the markets. I've been in this business since a teenager. I had 3 security licenses before I was 20 years old, way back in the 80s, and have just been through all the ups and downs and turmoils of market and market conditions. But there is one set group of strategies that kept really providing a good foundation and a good source of income, and also good results for trading, and that is the delta neutral trades, which there are a variety of. There's several different versions, many different strategies that fall under that delta neutral strategy window. And in my many years, over half of the years that I've been trading, I did it professionally as a money manager, and applied these strategies in managing really what we call OPM, which is other people's money. All right. So I was a hedge fund manager. I've been a mutual fund manager, started 3 different investment firms over the years, and I am still to this day heavily involved in the securities industry. I'm a past president of the Security Traders Association, of a local chapter of the Security Traders Association, and past chairman of the Market Technicians Association, which that's the certifying body for professional market technicians in the across the world. Believe it or not, they get the CMT designation, which is the Chartered Market Technicians, similar to a CFP or a CPA, and that has led to just years of study and analysis of the markets and how they move. And this one, quite honestly, Rob, is befuddling, because we have all this economic data, recession, high inflation, VIX crashing down into the teens, and yet this market continues to go up. I just yeah,
it's confounding a lot of people. If you look at the comments on the YouTube channel, which Jeff will be doing some contributions for us as well, and you'll see that people they're almost becoming angry at why the market's moving to the upside. But what I always say is that it takes 2 sides. If everybody thinks that this is a fake rally, or there's nothing behind it, that's this one guy wrote in, it's like, there's no reason for the market to go to the upside. And I was like, you just gave us one reason. Nobody thinks there's any reason for it to go higher. That's reason in itself. Everybody views it one way, the market's going the other way, and that's just the way it works, regardless of what's the underlying. Anyway, we could chat all night, so I don't want to take everybody's time.
Yeah,
thanks for popping in, and
you betcha.
Hopefully everybody from hearing Jeff's background and the pedigree that I mentioned, you can see why we're so excited to have him part of the team, and hopefully you'll join. We'll be doing TradeFinder again next week, and remind you.
Yep.
But then on the Wednesday, so a week from tomorrow, all our TradeFinder subscribers can get his presents for free. So show up, and he'll tell you about his strategy. So again,
Wednesday the 8th.
Yeah,
Wednesday the 8th,
at 9 p.m. Correct?
Yep.
9 Eastern time.
That's correct.
Okay,
that's correct.
Just
so
double check. So yeah,
looking forward to seeing everybody then.
Yeah, thanks,
Awesome.
Jeff. Appreciate you coming on.
You bet. Have a good session. We'll talk
to you. Thanks. Go get warm.
Thanks.
Jim was telling us he's in North Texas, and it's they're dealing with ice and all kinds of problems there. Not an issue here in Florida when it was 82 and sunny today. But let's get back to talking about the markets, and we'll look at the diamonds. And we showed the where the S&P was. So we'll take a look at the diamonds, which is starting to move into, if we go back and look at the S&P, there was some talk of a potential triangle there, and it was a little bit of one, but I don't think it was. There's just big gaps. So was it a large triangle? Well, you could make a case for it. I don't think it was the most well-formed triangle that I've seen, and I've seen a lot of them because that's kind of how I made my claim to fame in the world of trading. But look at this one here on the diamonds, and I think you can see that this one is starting to form. It's smaller, but it's tighter, and it's as Jeff was saying, who knows which way we go from here. We could get another big bull run, or we could correct and go back to the downside, and perhaps tomorrow does set the tone, depending on how hawkish, or if they become a bit more dovish on the Fed, that could generate a breakout. But that, to me, looks like a nicely formed symmetrical triangle, better than what we were seeing on the S&P before. So now let's look at the Qs. So take a look at the Qs. And they've been doing well, and they're garnering some attention now, which that usually starts to slow things down when everybody starts to talk about it. Kind of what Jeff and I were talking about. If everybody thinks the market's going to go down, it's going to go up no matter what's going on. And the Qs had this nice bounce. We've talked about this 260 level so many times. It's trying to get above 290, which it's done. It tested it. Closed on it yesterday, but bounced back off of it today. And so the next aim is to see if it can get above 300, one of those big round numbers that we talk about all the time, the tractor beam effect, using the old Star Trek analogy. But it's to see if the Qs can hold 290 and get above 300 would be really bullish. But, and everything could change tomorrow. Who knows? We'll have to see. And then the IWM, how many times have we talked about that 190 level on the IWM, and look what happened today. I was excited to show you this because you've heard me say this so many times over this past 8 months or so on this trading range between 170 and 190, and there's the break of 190. But you got to have a follow-through day, so we have to have confirmation of that. Can we get that tomorrow, or is it a one and done and we move back and it doesn't count? In my mind, one day the market gives head fakes all the time, and so this break of 190 has garnered some attention. It was on the financial networks about the small caps and their leadership today, and perhaps they do lead us from here. Maybe they take a little bit of a page from the Qs, or maybe it's the Qs and the IWM, the small caps together. But tomorrow matters. We need a higher close tomorrow for a follow-through day. So if we don't have a higher close, that means no follow-through, and then this break of 190, if it falls back below it, probably doesn't hold. So we're going to have a lot to talk about when we get together next week for sure. And then Bitcoin, as we've talked about, I've been saying, at least, that I was impressed with the move up to 24,000, and it's doing. If you're bullish on Bitcoin or the cryptos, this is exactly what you want. And you might be thinking, no, I want it to keep going higher. Well, it's not going to go straight up. Nothing does. We've talked about that all the time. Nothing goes straight up, and if it does go straight up, it tends to come straight back down. So it's been a really impressive move from 17,000 up to 24,000, and now we're consolidating here right under 24,000. If you're bullish, that's what you want. You want it to consolidate. You can see the 10-day moving average is catching up. Let it regain some momentum and energy to try to break 24. And then, as you know, if it can break 24 with follow through, then it probably goes to 28 in a very short period of time. But it's got to do that first. But to consolidate for like a week here without a significant give back and allowing the 10-day moving average to catch up, that's really bullish. as far as Bitcoin and the rest of the crypto. So I think that's impressive. So we'll look at the EWA. We'll look at the XJO Thursday night. So just to save time, to make sure that we have a little bit of time for the Q&A. You know, we're right here at this area of 25, and you know, that little bit of a doji there at 25, and that's been the level that it needed to get to. And so now we rest a little bit here, but you can see what's happened. We've come back down. The 10-day moving average is caught up. So you had a doji when you were slightly overbought, right at an area of resistance at 25 there. This looks pretty constructive for a potential move back to the upside here as well. So these consolidations, even though there's been a little bit of a pullback, is bullish. So let's take a look at Canada with the EWC, and you can see up to 36. And so same type of thing as with the EWA. We're at an area of resistance. Pretty impressive move today, following along with the US move. And 36 is key. Can it break above 36? If it does, then you've got a pretty nice trade here, I think, on the EWC all the way up to that previous wave 4. So 34 and a half, or excuse me, 38 and a half, something along those lines. But it's got to get above 36 with follow through first. But it's trying. You know, touched the 10-day moving average on the low yesterday, tapped on it, moved back to the upside, just like our market did. So, yeah, I mean, the EWC looks pretty good to move higher. It's been interesting to see comments on the EWG on YouTube now. And when for those of you that are watching us on YouTube, and if you haven't been to the channel, please visit it, Elliott Wave Options on YouTube. And there's been commentary, people flexing their muscles on the EWG. I haven't had that happen for a very long time. But this consolidation here, once again, is super constructive in my opinion. We had this vertical move. I don't like vertical moves. So when it happens like that, I get nervous about a retracement. Look what happened last time we had this vertical move. So you had a vertical move out of the EWG. We did get a little bit of a pullback because it started to go vertical again, but it didn't retrace the entire move, and it consolidated through here, and then it took off again. It looks pretty reminiscent of what it just did as far as consolidating this vertical move. Again, it is constructive for the potential to move higher. So all of these moves now, you can see, this goes back to Zach in the very beginning saying that little surprising to see the market move to the upside today. So much of the international stuff, our markets as well, a lot of stuff is at some resistance areas. And with a big Fed meeting tomorrow, do they tell us when they're going to quit? Do they say that they're going to hold? Could they do that? That will be a little bit of a surprise. I think the market is kind of thinking there might be one more 25 basis point after this. That could be a bullish sign if they say, hey, we're going to do this one, but now we're going to pause, just like Canada did. That could be enough to break through these. If they sound super hawkish, then all these resistance levels could hold. We could head back down. And, you know, if you're looking for something, if you're bearish and you're like, gosh, all you're doing is talking about constructive things, what about something that's flashing bearish signs? Well, that's when you take a look at the VIX. This is what you're resting your laurels on. If you're bearish, is the VIX is low. And we know what that means, that when you get down here and you have a really low VIX and low volatility, the next likely move is to the upside. We are building a little bit of a descending triangle here with all of these lower highs there. It formed a pretty decent little descending triangle on the VIX. So a break to the upside. And just as a reminder, a descending triangle does not necessarily mean we're going to break to the downside. I know that there's people market systems out there. I think I know as much about triangles as the next person. And I can tell you the data does not prove that a descending triangle is going to break to the downside, nor does it say it's going to break to the upside. All triangles, whether they're ascending, descending, or symmetrical, can break either direction. It's kind of neat to have a system that says, hey, if you have a symmetrical triangle, it can go either way. If you have an ascending, it's going to break higher. If you have a descending, it's going to break lower. It's a nice marketing system, but it's not accurate. That's not how things usually work. So this is what you're looking at if you're bearish is that, hey, we could break out of this VIX. And if we get a significant break to the upside on the VIX, that is not conducive to the market going higher. And that could be in cahoots with the market going back to the downside. So you're at an area of a lot of support. And to see the VIX go much lower, I don't think the VIX goes much lower. I could see a scenario, and I've highlighted this before, that we stay in this range between where we are here around 18, 19, and then maybe up to 25, and we bounce around there. I don't think that's out of the realm of possibility because we spent so much time around 35. So opposite side, spending a lot of time in the lower end of the range, it's possible. Will it happen? Who knows? We're going to find out in the not too distant future where things go from here. All right, so I did want to share with you one of our case studies that we did with our alert subscribers. And as you know, here at TradeFinder, we look for case study considerations each week, but then you're on your own as far as what you do with them, get in, get out, whatever along those lines. For our alert service that we have at EWOtrader.com, we send out alerts for entries, any adjustments, and exits. And so as you can see here with Costco, this was in our speculative portfolio. So we have three primary portfolios. We have our impulse, which is directionally based on Elliott wave patterns. We have our volatility portfolio, which is the triangles, look to break in either direction, almost always strangles. And then we have our AI-based time strategy, which is the delta neutral strategy that I talked about before, that Jeff's going to be coming in and complementing with his delta neutral strategy. So super exciting along those lines. But from time to time, we see something that looks interesting, but it doesn't follow within the rules, the guidelines that we give our alert subscribers for those primary portfolios. So if we see that, we put it in the speculative portfolio. And looking at this chart of Costco, what we saw here was some conflicting information. So you had a 5-wave to the downside Elliott wave pattern here, but it was at the last bastion of fib support there at the 78% fib level. When you looked at the DMI, which is my favorite confirming indicator, it was showing, hey, there's real strength to this move, and this may continue higher. You can see there was a zigzag there. So it was saying, hey, this zigzag may go to an extended level. We were at resistance, but the DMI was conducive of, hey, we may go to the upside. So speculative because Elliott wave and the confirming indicators are not in full agreement here, but it looked like, hey, if it does break to the upside, this could be a really nice trade higher. Well, as you can see, it didn't quite work that way. We did come back to the downside, so the Elliott wave pattern won out, but we came down to support and we broke back up, and now we're starting to break above resistance. So obviously the initial trade wasn't doing well. In fact, it was at a 100% loss. You can see in our mark-to-market graph, which shows where every single position is every single day. And instead of just saying, hey, we're going to close this out, take the 100% loss and move on, looking at the chart, it's like, well, you know, we're potentially breaking above resistance here. Let's do an adjustment and see if we break higher, and perhaps we can have a bullish trade and recover some of that loss. That's why we do adjustments, is to either lock in gains and try to keep it going, or to try to recover losses rather than just accepting losses. In our new subscriber call that we have, anytime someone becomes an alert subscriber, we invite them to our new subscriber call, and in there we talk about the adjustment process and how it's been my experience over my time. Jeff's got me by 10 years. I've been trading for over 25. He's been 35. But in my time, if you have just a cut and dry system where if you get an X percentage loss and you take that loss and you close the position out and you move on, it's death by 1,000 cuts. You're just slowly going to bleed your portfolio out by doing that. So I prefer to, if there's an opportunity, to make an adjustment. And so in this case, we made an adjustment, and lo and behold, Costco did break through that 480 level, and it made a really nice vertical move. And in a very short period of time, you can see the adjustment within 7 days there, we recovered the entire loss from the initial position, and we're in a gain. We're in a guaranteed gain. Now, the initial position was a February call. We still have that. It's not worth anything right now, but we still have till February expiration. We've already closed out the adjustment, which was, as you can see, for an April call. That's the one that regained more than the loss that we had. So the worst case scenario, even if that original call expires worthless, we're going to generate an 11% gain when we were looking at 100% loss. So I'm just not one that's willing to say, hey, let's just take that loss and woe is me and move on. Let's see if we can fix it. And if there's an opportunity to fix it, I'm going to do that. And that's how I trade. And that's how I've come from, you know, being a very mediocre trader to being a successful trader. And so that's what we like to share with you, going through and showing you those things. Sorry about the fireball screen back there. But hey, we could have fireworks in the market tomorrow, couldn't we? So anyway, so let's go through and look at our case study considerations. We still have a couple that might be considered open. And there was Monster Beverage when we looked at it and we talked about if it could hold 100. It has. Now it's higher than where we got in. So give it a chance and see if it can break that wave 3. It's got a little bit of a zigzag going here. And so maybe we end up with a nice gain out of that. The 61.8% extension is right at the wave 3. So we're going to have to go to that 100% extended level, but it could do that. It's trying, and it never gave up the 100 level. There was never a time when it went through that with follow through. We're starting to get some interest here out of the DMI. It's got a ways to go. That ADX is still low. As you know, it's got to break above 20 if you're familiar with the ADX. But hey, if that could set up where the two directional indicators continue to separate, the ADX moves up above that negative directional indicator and above 20, then we could have a nice run here. So I think you stay with this one. Abbott Labs, this is what it looked like when we initially looked at this on January 10th. And you can see it kind of moved up. This 117 is that zigzag extension. That's where it's supposed to go. It looked like it was going to try to go up there, and then it came back. So on this one, I think as long as it can hold 110, so this level of 110 is to ABT as 100 was to Monster Beverage. So as long as it can hold 110, it tried to break below it today, but it closed back above it. As long as it stays above 110, I think we stay with this. You can see it tapped the 50-day moving average on the low. So I don't think you close this one out yet if you're following along this one and stay in it. And then we had KB Homes, and this, I mean, the housing market just continues to, talk about not making any sense. Who knows? But the stocks are going up. So we had Toll Brothers that we did back in December. And we talked about this last week, hey, look at the charts and look what's happened. Look at that. So, this one is interesting because it's had a really nice move. You've got a nice gain. You could take this gain or our original target that I wrote down last week was 40. So we're not there yet. But watch what happened to that wave 5 forecast because the 3 is continuing. Now it's all the way up at 42. So we're nearing 39. Now looking at the 10-day moving average, we weren't overbought to start the day, but a tiny bit at the end of the day. So, you could take your gain here. Wouldn't begrudge anybody from taking a nice quick gain. Tend to do that a lot as well if we have the opportunity. Or you hold and see if we get to that original target of 40, which I think is likely. We could back off a little bit here, though, with that nice move that occurred today. 5% move today. So again, I think if you take your gains, wouldn't begrudge you that. If you wanted to hang in there and wait till 40, I wouldn't begrudge that either. Just understanding that you may have a day or two of some maybe back and filling a little bit, maybe a little bit of sideways move. I think all that kind of stuff would make sense there. So anyway, that pretty nice week if were following KB Home. So let's go and see if we can find something as good as KBH from last week for this week. And looking at, I'm pausing because I have never seen this before. See, the way I do this is I really want to do my best to try to make this an educational experience. And if everything is pre-set up and everything is Monday morning quarterbacked, I don't think you get the same value when you're watching as if I'm talking it through with you when I'm seeing it for the first time. And so that's when we look for case study considerations. We look at them together. And so I give you my viewpoints and we talk about them, but I haven't preset these. I haven't pre-looked at them. And so I update the charts and update the scans, but I have never seen this before. This EWO bullish impulse is my search. This software program, if you're wondering, is called Profit Source. It's created from a company called HUB.com. They're an Aussie-based company, and they have the best, I think, the best Elliott Wave software that exists. And so if you become an Elliott Wave options and the EWO Trader Alert subscriber, and you have Profit Source or Integrated Investor, but Profit Source is the product that everything is moving into, you get my searches. So anything that says EWO, those are my criteria. So you can see exactly the same thing I look at every single day. I look at my search results every day. And usually it takes the thousands of optionable stocks and brings them down to a handful. It's usually 5 or less. If you see double digits, that's a lot. I've never seen 33 results. That's a new one on me. 33 results on the impulse search. That's amazing. If you're looking for negatives, that could be one. It's like someone else would be saying, wait a minute, why is that a negative? That's a positive. You're seeing the most, but now we're seeing a lot of stuff moving to the upside. And again, everything starts moving to the upside is the same thing as everybody viewing the market's going to move higher. It gives you pause. And that's, you still trade the patterns because the market's going to do what the market's going to do, not what you think it's going to do. But to me, that's a caution sign when you have the highest number I've ever seen on the results. But let's go through and see what we can find here, and maybe floor decor, because KB Home is still on there. So if you were wondering about should you take it off or not, it's still giving all of the signals, and that doesn't happen very often. And you know what? PayPal keeps showing up too. It showed up multiple times. I'm just blown away by how many results there are. Wow. So if we look at PayPal, here's been the issue on PayPal. Everything looks great from the confirming indicators. This kind of goes back to the same thing that I was showing you with the Costco trade. You can see it's in a 5-wave to the downside pattern. Now with Costco, we had all those indicators, but it looked like, hey, let's take a shot. Let's speculate and see if Costco breaks through that wave 4 and runs. And in that case, it didn't. And so the position was a loss, and then we fixed it. But in this case, you've got the exact same scenario here with PayPal. I'm dying to do the exact same thing here. But the old Great White song, once bitten, twice shy. I wonder how many people even have heard of Great White. But anyway, when you take a look at this, moving to the upside here, it looks like it wants to break above that wave 4, but we're only at 50%. I mean, it hasn't even gotten to 61.8, or it could go to 78.6, as you know. So that could be something where you say, well, wait a minute, that's a different scenario. With Costco, you were at your last fib result, and if it's going to go down, it's going to go down now. You could actually have PayPal continue higher to the upside in this wave 4 and still maintain this 5-wave to the downside pattern. The wave 4 could go up to 61.8 or 78. So you could still have a continued move to the upside. In other words, you could still have a bullish trade maintaining this 5-wave to the downside pattern. Something to consider there. But I think with all these results, we can probably find one that's an upward pattern, not in a 5-wave to the downside pattern, looking for an extended wave 4. I want to look at floor decor just because of what's going on with these housing stocks, but I also want to look at Adobe, because Adobe for a long time showed up a lot, and then it kind of just didn't. And now I'm starting to see this in the searches again, and see the difference here? Now, here we have a stock that's in a wave 5. We have all the same good looking indicators here. And we've closed this gap and it didn't bounce back down when it filled that gap. So breaking above this level at 360 and kind of consolidating above it, I think is really bullish on Adobe. That looks pretty strong to me. And then when you look at that DMI, man, that looks like that really wants to run. It's going to be hard. It's going to be hard not to pick that one, but I do want to look at the floor decor just because of the same sector that it's in. But it's going to have to be a pretty good chart. We don't have time to go through 33 charts, so I'm just going to highlight a couple here, and then we'll take some questions. But not a bad looking DMI there. It did pull back a little bit, but we held support there at 85. So you can see this move right there. That was key to hold that level. We're not in a 5-wave pattern, so we're in a corrective pattern, unless it's not a zigzag, because that was a flat. Maybe we have one going here. That's one. That's a pretty good one. So we're at the 61.8% level. So we're likely going to go up to 97, 98, which makes sense because that's also where the August highs were. Look at that, how that ties in. I think that's a pretty solid target for FND. And if KBH is still going to be on there, you know, those are two. I like both of them for different reasons. So, you know, we've had such good success lately on these alerts. You know, we did 2 back on the 10th, and we already closed the one. We're still looking at ABT. We had MPWR, which took off, NVIDIA, which that was a home run. And now trying to look at NVIDIA again, that may come up in the Q&A. But let's go ahead for today. Let's just do a bonus. We'll do them both. So we'll do Adobe. All right, I kind of wanted to look at some strangles, but when you see that many results, we'll go ahead and do this. I think with the VIX down, I think strangles make sense right now. Our subscribers are going to likely see some alerts come out on some strangles tomorrow. So FND and Adobe to the upside, and then we'll see how that plays out. But yeah, I really kind of wanted to do a strangle. But those charts look pretty good. So anyway, we'll stay with the trend of the market until it changes. So with that, Zach, managed even with our introduction of Jeff to finish right here at 9:45. So I guess I talked faster than normal. Oh, I didn't do the INDA. Hang on just a second. That's part of the reason. So let's do the INDA real quick. And then we'll do questions. So friends in India get really angry if I don't show this. And this is, I mean, they were actually talking about this on the financial networks a couple days ago. As you can see, this big move lower, and the potential is, you know, some things going on in India. We're actually going to start doing an international report, and I mean, we've got so many cool things for you guys this year. But sitting there at support there at the 61% extension on this downward zigzag pattern, that needs to hold. Otherwise, we're coming back down below 40 again on the INDA, and hopefully that doesn't happen. But we're in kind of no man's land here with this gap down. It has consolidated here. And with the 10-day moving average, you can see how oversold we are. But you don't want to see it come down to 40. And if it gets to 40, we're probably coming down to test these June lows and go to the 100% extension. So the bullish case, if you're looking for something on the INDA, is you want to hold right here, right in this area here, around 41, the 61% extension. You can see it's acted as some support for a couple of days here, plus being oversold, but really critical for the INDA to hold right here otherwise it's likely going lower. And I know that's not what a lot of people want to hear, but that's what the charts say. All right, Zach, with that, now we'll go ahead and take some questions.
All right, sounds great. Thanks for that presentation there, Rob. And at this moment in time, I'd like to remind everyone out there watching on the live platforms to go ahead and smash that like button for Rob if you've enjoyed the webinar so far. We do appreciate it. All right, so
Thanks for that.
We are going to go over to a request from YouTube, which I don't always acknowledge requests, as we know we go by random here for TradeFinder, but this one is serving you with redemption coming from the user Japanese aggression for CAT, and Chris would like to look at CAT as well.
Okay. Well, you know, this one was aggravating to me this morning. Just because, you know, I talked about how I felt like CAT was overdone, couldn't understand why I was still going to the upside. You know, looking at fundamentals and things like that, it didn't make sense. And you looked at some of the fundamental, or I did, some of the fundamental research firms. You know, you can actually become a subscriber and they do all the fundamental research for you and stuff. And they were talking about how all signs pointed to CAT having an earnings beat. So they talked me out of buying puts on CAT. And thought, okay, well, let's just see what happens, and we can still make a trade after that. We'll have the drop in IV, etc., which we're still going to do. It held in there pretty well, but this morning was down, you know, 15 points, which would have been a nice trade on the puts right after the earnings came out. It held that 30-day movement. I'm not sure it's done yet. So what I want to wait and see is, do we get down here to 240, which I think is likely because there's so much support there, and hold. And if we do, then, you know, we may actually look to go long there. But with this move to the upside, you know, I was right, and I taught myself out of it. And, you know, it's just one of those things. So as far as where we go from here, that's going to be the thing. I'm going to wait and see if it gets down to 240, which I think is likely, and then can it hold 240? That would come down. It would recover this vertical move, which didn't make any sense. We get to the 50-day moving average. We get to support. To me, everything points to Caterpillar coming down and testing 240. And if it holds there, then we'll look to go long. But if it breaks that, well, then we're into, okay, you know, we've got this vertical move here. We've got this big gap that needs to get filled. We got a lot of stuff to the downside, but it has to break 240 first. And we'll see how it plays out once it gets there. So, you know, it was tempting on the rebound from this morning, but it's in no man's land right now. Difficult for me to imagine, you know, it's going to do what it's going to do. What I imagined is meaningless, but to me, it's difficult to imagine that where it is, that it doesn't come test 240. And so that's what we're waiting to see, if it comes down and tests 240, and then we go from there. So yeah, that was aggravating. But I mean, I literally had the trade written down, the puts and everything, and read that research. And I mean, they made a very compelling argument on why all the fundamentals were pointing towards a big earnings beat. Didn't happen. That's the way it goes. So missed that one. Thanks for reminding me of that. I appreciate it.
Japanese aggression wrote in here saying I didn't mean to make Rob sad about CAT again.
Well, you know, it's nobody's fault but my own, right? It was still my choice at the end. And you know, you outthink yourself sometimes. So, but no, anyway, I'm actually glad you brought it up, so I had a chance to go through all that. So,
and we're all guilty of outthinking ourselves. I know I am, that's for sure. I wanted to say good on you for all the symbols that you covered tonight, because there's been a lot of them that have been in the chat. I know especially Mike's going to be happy to see that Adobe is one of the case study considerations, as that was one of the symbols that Mike wrote through. We have tons and tons of questions, and not, you know, too much time, as we are aware. So I'm going to power through and give you as many as I can.
Okay, well, I'll try to keep my comments to a minimum too, not be as normally long-winded.
Yeah, no worries. I'm just gonna power through and give you as many symbols as I can, and I'm gonna go by popularity there. So lots of requests for UNG.
Yeah, I figured that was probably going to come up, and almost brought it up beforehand, but I figured that would. I mean, this has just been. Yeah, here's another one we missed, right? Talked about, the case for UNG to go down because it looks forward, and it's hard to imagine we're going into winter time, and here Jeff's talking about, ice in northern Texas. They're dealing with cold and stuff there, but yet we're going down because it's already looking past that. It's looking for coming out of winter time, and that's why we've been going down. But now we're getting to a point where okay. Now we start looking like, is this downward move overdone? And I think so. You have a 50% wave 4 correction, you're at 100% extension, and it's just been pretty much down every single day. And so I think we're getting to an area where you wanted to start taking a speculative look at something. You could take a look at this to where I think UNG could bounce back. I don't think it's going to make any sort of another run. It's not going back up in here unless something really unforeseen happens globally. But it's just as far as from a technical standpoint, I think we could get a bounce back to that 50-day moving average, back up to 15. We're seeing some pretty good separation here between the 10-day moving average and the 50-day moving average. That works the same as my rule that no security in any time frame gets very far away from the 10-day moving average. Same thing between those two. I like that one as far as a potential bounce. So I think the downside is just a bit overdone now, and we could see. For one thing for sure is it's a good risk to reward argument for a speculative trade. Could it go lower? Sure. That wave 5 could extend, but it's at 100%. It's where it's supposed to go, and we're at 10. So the argument, how much lower can it go? I like that one for a speculative bounce higher. That might even come out in the speculative portfolio. So like I said, I almost showed that before, so I'm glad everybody asked about it.
Thanks, Rob. We just had a request come through for Bitcoin, and we've had a few others as well throughout the session. So I just want to remind you to be sure to check this recording once it's uploaded, which will just be a few hours, if that, after the live session here is over. So
yeah, we talked about Bitcoin earlier. So yeah, let's go to something else. So
all right, yes. So let's go with QS.
Been an interesting one in the past, and yeah, hard to imagine that it doesn't make it back to 10, isn't it? But there is some resistance here where it is right now at 9, and it is a 50% wave 4 correction. It just, I don't know, it just feels like it's trying, right? It's held the 10-day moving average, and we could get this wave 4 could break higher, go to 61.8, etc. So hard to imagine for me that it doesn't make it to 10, but after that, I don't know. It's a really good LA wave pattern to the downside. I think 10 gets you at around 61.8. Maybe you get some institutional buying to come in, or you could have some short covering. If institutions want to push it higher and come in and buy, then they could push it up and maybe, if it can break above 10, but that's all down the road. As far as where we go from here, it bumped its head on 9 and bounced back, but it's held the 10-day moving average. I think it wants to run to 10, but then after that, I think we have to reevaluate it, see where it goes from there. All right, next.
All right, got a couple of big dogs for you, Amazon and Apple.
Oh, I haven't heard Apple in a while, so not surprised to see Amazon pop back in there, and breaking above 100 was key. We've talked about this before, but again, we're in a 5-wave to the downside pattern. Are all these patterns going to become disqualified? They could, but they're still in play, and they're still in play for a while on these wave 4 bounces. And then you look up here, and are we going to get this close and not close that gap at 110? I don't see that happening either. I think Amazon goes to 110, but then I think we have to reevaluate. Once again, we're at a 38.2% wave 4 fib level, so there's plenty of room to stay in the wave 4 and go higher. But I just can't imagine Amazon doesn't close that gap at 110, and then we have to look at it again. So I think that one goes there. Apple has had a pretty nice run back from its low, and as you can see, got a little bit overbought, held in there pretty well, came back to the 10-day moving average. We haven't given that up. We're still actually a tiny bit overbought, and it just looks like to me that and do we get a little bit of a blip down after if the Fed is more hawkish than expected tomorrow? Maybe. But I really think that Apple makes its way back to that wave 4 target. It was a really well constructed 5-wave to the downside pattern. It didn't extend past 100%. It's supposed to go back to the previous 4, 150 to 155, 150 to 160, call it. All that area has just been a ton of consolidation and support over time. It's hard to imagine that Apple doesn't go back and test that wave 4 to me. So, I think the only question is it sooner rather than later? Like, do we have another leg down tomorrow, or does the Fed give us more momentum to go to the upside? Well, we'll see. All right, next one.
Next up, we're going to go with gold. A lot of requests around.
Yeah, these are good ones, and I know we have limited time, but the symbols are coming up with are good. And this is, man, it's at the top of my, if you could see my trade list, SLV and GLD are the top 2. Every single day, I'm watching, I'm waiting for this opportunity here because that wave 5 is disqualified. So that's done. So we're looking to see, when are we going to break above 180? Are we going to break above 180? If we do, we got 185 probably testing the previous highs. Maybe, how the Fed is perceived tomorrow gives the ammunition to break above this. So I'm just going to show you SLV. Both of these, I think, are just itching to be, look at the consolidation between these two. Something's getting ready to happen, whether they break higher or lower. They're getting ready to move. And it's going to be nice moves out of both of them. And I'm just watching and waiting for the signal to get in. Those are going to be 2 really good trades, I think. They just need to break out of this consolidation. Both of them looking the same way as far as consolidating. And I don't know, maybe tomorrow is the catalyst. We'll see.
All righty.
That was 10, but let's do 2 more.
Okay, feeling generous this evening. We'll go with CGNX from YJ on YouTube.
Okay. Oh, nice day today, huh? What I say about vertical moves, they get retraced. We don't always know when. It's the same thing as when gaps get filled. They get filled, but we don't always know when. And I think that's going to get filled too. And it looks like it's trying to do it now, especially with the day it had today. So you look at that. Let's see what kind of volume there was behind. That's what you want. Talked about this before. When you get a spike like that, you don't want to see one of these big, huge spikes, because that usually means, well, everybody that wanted to buy is bought, and then it backs off for a bit. You want to see good, solid volume, supportive of a potential continued move higher. By breaking above this area of resistance that it had right through here, and that's what you can see where it broke from that today, broke above it, tested it. There's nothing to stop it now from going to 65. So I think there's a very high likelihood that CGNX makes it to 65. I don't know when it's going to happen, but that looks really, really good. That's a good symbol, good call there.
Absolutely. And so we'll do Visa.
Oh, wow. I haven't looked at that in a long time. Typed in Visa. New York Stock Exchange. Surprised you didn't make any comment about the single letter symbol, Zach.
I was tempted to.
Pretty nice looking move here. I don't know what happened here. If that was from that bad data day that we had, where the market was giving bad quotes, because that doesn't make any sense unless that happened to be an earnings day. Yeah, no. So that was just that So I don't think this counts. The exchange will eventually get all these rectified. So the key here is breaking above 220. It's in NOA5. I think it may eventually hit that level. But yeah, Visa looks really good to continue to move to the upside as well. The DMI is starting to say, hey, you know, this move is getting mature, but I think it still goes higher though first, maybe to 240 or so, maybe not quite that high, but yeah, I think there's a good chance that it goes to 240, but I'd be leery of the fact that the ADX is approaching 45. It's getting pretty high. So there's some upside. I think there's some upside left, but I would be cautious on the continued move and watch that DMI for signs. And right now it's okay because the ADX is moving up. It's still between the two directional indicators. So as long as that positive directional indicator can stay above it, it's okay. What you don't want to see is that positive directional indicator to dive back down, because that will occur before the ADX turns. So a little more to the upside, but I'd be cautious on that. And if it made it to 240, I might look to take some gains there, or at least reevaluate it. Thanks, everybody. As always, appreciate your time. So, you know, time's the most valuable asset we all have, and we appreciate very much you spending some of your valuable time with us. And we're going to do our best each and every time to make it an informative and educational use of your time. Thanks, everybody. Have a great rest of your week. Going to be interesting to see what happens with the Fed tomorrow. Watch the markets tomorrow afternoon. Take care.